couple of months or so, wages are going to be the big thing in Japan, and we're already hitting decent levels there at 4.8%, and we are going to see if they're going to go even higher than that. That's done some damage to dollar yen this morning. As we see on the chart there, we had a little top out into the start of resistance into that 133 area, and we're all the way back, maybe testing the zone below. Quite a substantial number there, Kay.
Very. I actually have no recollection of such number in the past. As far as I can, at least over the past, whatever, 20, 25 years, I can't recall seeing such numbers. So I do understand this move in yen perfectly, because as you say, this is what the Bank of Japan is waiting for. And the market is correct in trading it. And then, as I was also showing in the room, and you are on the dollar yen, it's really, even before those data came out, we have seen the importance of that 132.85 figure. It's really it's getting to be a very important level now, and that is an absolutely great marker that we have there. For going further. This level, I think, is not really a random level, because we have already seen some traffic there at the end of December, around that 132.85, 133 zone. So I think this may be your new 134.5.
Yeah, well, this is a level I was expecting it to be a bit more on the way down. This was one of the levels I had in my area, because it was, following the big move. It's big fib levels coming off that big rally that we had last year. So I was expecting it a bit more action on the way down, and really it carved through it initially. But even straight after, let's go into this one. As soon as it got the break, boom, then it's held in as resistance, holding as resistance. Then we did get a little move above, but then it held again.
End, right?
So it's one of those levels you flag up. It's a bit, it's obviously a bit of a zone here, up to that old fib maybe.
I think so.
Almost on the dot, it stopped to that prior high from early in January. That's why I watch it, and I was expecting perhaps to see, this inside range between the 127 and the 134 here. You do tend to get in this pair inside ranges as well, and that's possibly going to be this 128, 133. I thought it might be see what happens at the 131, but we went through that. So 133 looks to be it, and we trade it thereafter and see what happens. Now we'll probably get a look at this zone here and see what it wants to do there. I'm surprised it has come down so quickly. Yeah, the data is very strong, but it shows that we are, there's two sides to this coin, heavily traded. Obviously the US side, what's going on there, and the Japanese side, what's going on with the Bank of Japan, and what's going on with the data. So it's going to be some good volatility, I think, in this pair, and if the levels hold, these ranges hold, it's going to give you decent levels to play against.
Yeah, because it was also pretty good for those being long. Myself, it was a pretty obvious take profit zone. If it goes through, then one can always re-enter, and those who wanted to lean against it have now had their success, because we are back to where we started roughly yesterday morning. So it's a pretty great trading zone up there.
Yeah, because I know a few, you particularly, and a few others in the room picked them up early Sunday night when we were down. We had that first pop up in the 132s, and it pulled back to sort of 133 at 131.78. You guys picked it up. That was a great trade, running it all the way up again. And I tapped a short against that level yesterday just to add to my core short position, but I couldn't refuse not taking some money off down here quickly.
You have to, because next thing Kuroda comes out and says it's only one number and you're back up at 133. We have to, in the markets we are seeing, even if you develop a trend, you have to trade the positions around a bit. It really
Yeah.
gives a lot of breathing room, and you always need to give a little bit of breathing room to your positions. It's just common sense, right?
Yeah, exactly. And you've also got to take advantage. You know, I got in a short up here, and I was expecting maybe to add into this 133 and put it in the bottom drawer and leave it with the rest of my shorts. But you know, you see the price move coming the next morning; it's 100 pips lower. You've got to take some money. It's silly not to. It reduces the
especially
position,
for
but
us retail traders. If you're a
yeah,
long-term investor and you're working in a bank or in a fund or in an asset manager, maybe different. But if you're a retail trader, and I mean it's just my personal view, of course, but it helps me to stay in positions for a lot longer. Like for instance, euro sterling, I've been in it for ages now. Okay, now I'm running my option, but I've been in this stuff for months. And you take some off, goes back down, you reload them, or in the end, take some off, goes back up, you sell them out again. And if it goes straight down, well, you're still your base position short, right?
yeah, exactly.
And your account would only be happy about it.
Yeah, and so will your broker.
Yeah, well.
But if you're making money, then your broker's making money, but better it in your pocket. Right, let's get through the rest of it. RBA was on the docket yesterday, and they hiked by 25 pips, as expected. And they also said they expect further increases in the interest rates moving forward. So the finger is moving away from the pause button in Australia. Aussie dollar has kicked up a bit off the lows. Again, another area of support, a bit lower than I might have liked. I was hoping this zone here would have held things up, but we've seen it previously, you know, hold it and then have a little look under. We're back above now, so we're keeping the rally in play, the longer term rally in play. Oh, there goes my phone. Shut that off. So we're back up into the 69s. As I said yesterday, there's all the hard work's got to be done again to see this getting back towards the highs. All these former levels are going to be coming in again as resistance. This bounce at the moment, in my opinion, may be looking a bit dead cattish at the moment. Obviously, if we get back up towards the 70 level, then maybe we've seen a decent bottom put in play. But I'm not ruling out that we move back down and perhaps head lower. I was twitchy over the highs last week up around here. It was just feeling a bit toppy, and we've had the move down. Can it go further? Of course. We have got the fib down here of this whole October move at 67.80. So that's the first test really of this big trend, and it hasn't really had a real test of it yet. But in markets, nothing goes the same way forever. So I wouldn't be surprised if we do get a move a bit further down, but it's in the balance right here and now. ECB had a consumer expectation survey out, and consumers saw expectations for inflation in 12 months' time pretty much unchanged. But they did see 3-year inflation edging up a bit. Expectations for income growth over the next 12 months increased, but expectations for nominal spending growth decreased slightly. So it's all looking fairly rosy-ish in the Eurozone. Don't look at the consumer confidence number, it's always a negative, but inflation is still expected to creep up long-term as far as consumers are concerned, but they do see income being supportive, and that's playing into the sentiment we've seen from some of the data that, you know, it's soft landing territory for the Eurozone as well, which is going to be good news moving forward. But it's not all been good news. German industrial production was out this morning, and that was looking pretty crappy. Let's just pop that on the screen for you. Where are we? Down 3.1% there, month on month. So much worse than expected. Year on year, not on the screen there, but it came in at minus 3.9% versus an estimated minus 0.2%. So again, much worse than expected. It is December data. It depends what the German Stats Office put as their estimate for the prior or the flash GDP number, because they would have estimated this number. Whether they estimated it to be falling as sharply as that, I don't know, but it could have an impact on the next revised GDP number from Germany, maybe pushing it a bit lower. I think it came in at a little bit of a surprise, plus 0.2, if I recall correctly. But feel free to correct me if not. While we're on the euro, a Reuters poll just out expects the euro to rise to 111 in a year. And that was versus 110 in the January poll. Well, we got to 110 not so long ago, but in a year's time, they expect the level to be up at 111 now from 110. Bank of England, BOE's Peel squawking yesterday, said QT is likely to continue even if rates come down. And probably one of the truer words you'll hear from the Bank of England, there's a higher chance of inflation becoming embedded in the UK than in the EU. And rates may need to stay higher for longer. And the MPC is not yet at a point for discussion on the rates turning point. Over to the Fed, and Bostic was out yesterday talking about the NFP. And he said the report raises the possibility of a higher peak rate, but he needs to study if the Jan NFP report was an anomalous reading. His base case is he still sees 2 more hikes coming, not a voter until 2024, but that's his view anyway, and interesting on the NFP. The US had some fun and games yesterday in Ali. They said to be planning a 200% tariff on Russian aluminium as soon as this week. That was a bit spicy in aluminium yesterday, wasn't it, Kay? Yes, I know you were watching it. What happened?
Yeah, I was watching it, but then we had a spike, and then it came straight back off. And you know, we were like scratching our head. I mean, is there a trade here? And it didn't seem like it's at least not on in the immediate. I really don't know, because this thing could have been expected for a long time already, and I really don't know whether there is a trade there or not. Besides from the insiders, of course. I mean, insiders will know what to do with that. But I think for the broader market, I'm going to leave that one alone. Happily leaving it alone.
Yeah. And another number out yesterday, which normally I don't even give more than a cursory glance to, was the, I don't even know if it's even on this sheet. Let's have a go back to yesterday, was the US Employment Trends Index. This one always comes out the week after the NFP. And as I don't often pay much attention to it, and there it is there. But I kept an eye on it this time because of that bumper NFP. I wanted to see if that was reflected in some of the other employment data. Now, this is one of these indices that measures a lot of jobs data that we get. So it's almost like a summary number, if you like. But it did jump up to 118.74. That number 11706 was revised, I think, from 11630, if I'm not mistaken. So it was quite a stiff jump. So that adds some credence to the NFP data we got last week, that it was a strong and decent number coming into the new year. I'm still very much skeptical about it, and I think there's a big risk that we see a bit of a reverse at the next one. But for the meantime, it's still a strong number. And more PMI madness in Canada. Crazy numbers, jumping to 54.7 from 40.6. That's the non-season adjusted number. The season adjusted number to 60.1. The previous was 33.4, which got revised to 49.3. So it was expected at 42.3. So another huge jump in the PMI is a bit like what we saw from the services ISM in the US. This is Canada. They have history of having very wonky measurements over there. For those of you who may remember the Canadian ADP jobs report, they tried running, was it last year or the year before, which was an absolutely crazy number. It used to come in 1 month saying they were plus 400, and then they would revise the last month's plus 200 to minus 800, all over the place. So not sure I trust Canadian data at the moment on that one there. That's all I've got on the headlines for today. Bit of a quiet one. Kay, you got anything you want to pick up? Is there any,
no, but I just want to comment again on the and it doesn't seem to affect too much on the euro, but I'm a little bit underwhelmed on the early week European data. But as you say, they are December data, so we need to see what's going to happen in January. Euro doesn't seem to suffer too much from it, but yeah, I'm less than impressed. Let's put it that way. Also, the French, what is it? The French current account, I think. Where was it? This morning. Yeah, the French current account deepening a little bit. Those trade balances not looking great either. So yeah, I'm still, let's say, into power. I think that the dollar will remain pretty big. We may have some corrections, ex-yen of course, but we may, and Aussie perhaps, we may have some corrections there. But versus the majors, it looks like cable, euro, dollar, we're still finding offers on rallies, and I don't think Powell will change anything today. He's probably going to continue to walk his fine line. He's got all reasons to be hawkish, but he may just go and he may tell the markets, though, in I don't know, hidden terms or diplomatically respected terms, that the market is wrong to wait for rate cuts. So I don't see him saying anything that would fight this dollar move this afternoon.
No, and he really hasn't said much at his last few outings, has he? You know, we've had 3 FOMCs now, Jackson Hole, and he hasn't really strayed off the path at all. You know, sometimes you expect central bankers to do a bit of shepherding of market expectations, but he's not really done much at all. You know, brushed off the financial conditions at the last one. So yeah, maybe this one's a bit of a dud, but obviously there's always a risk that he does drop a bomb or two from that one. That's later today at 17:40 UK time, when Powell pops up at the Economic Club of Washington. Right, let's go over some of the moves that we've seen. Aussie dollar, we've been over. Dollar yen, we've been over. Bit of more weakness still in the euro and the pound. Euro touching that 107 area and bouncing. I probably should have a bit of a line in there, but you know, it's looking a bit. We said last or yesterday that you know, dollar's probably a dip buy, and that's proving to be the case. You know, the bounces are looking pretty weak at the moment. You know, we had that first test of 107. A very weak bounce up to 40s. Then we're testing the 107, and again, it's not really bouncing a lot. So, you know, maybe some further pain to come here. Cable pretty much the same. You know, came down, tested the 120, had a little bounce up to 50s. Now we had a little break, flushed some stops, bounce a bit weak again, and now we're messing around on the level again. I think if we clear and stay under 1.1990. 85.90, we're probably heading down towards 119. What do you make of it, Case? Dollar is going to keep that upper hand for a bit, I think.
I think so. Yeah, I think so. I mean, Powell isn't going to change anything. We've seen bumper data. Unless we get some really surprising stuff out, what do we have this week? We don't have much in the dollar this week, right?
No, it's not a lot at all.
Oh, it's CPI next week, Valentine's Day CPI, and I think until then, at least my bias is to buy dollar dips. But as I said as well, if we are and we are trading a near perfect soft landing scenario for the US. So and by that I mean the dollar is doing better, the yields are creeping higher. And at the same time, the U.S. equity markets are not falling out of bed. That is the typical for I'd say a pretty decent economy, which we call today the soft landing. And that refrains me from really being too aggressive with dollar longs, because we all know that higher equities, correlation algos or correlation funds, if you have higher equities in the States, the dollar tends to drift a bit lower. So that can balance a little bit of the rest of the dollar demand. So I'd advise not to be too greedy if you are in good positions, and just yeah, take some profits, and you can always reload higher up, or if levels break, add on again. But that's anyway the way I'm trading it. I also do think that in this whole scenario, and we have to define what is risk, okay, and take the yen apart outside of it, because that's living its own life. But crosses like, for instance, the Americas, I think stuff like Euro-CAD, for instance, CAD yen is holding up, for instance, despite the dollar yen being lower. But then stuff like the Mexican peso should also be a little bit benefiting from stuff. And those are kind of the crosses that I trade when I'm not in heavy dollar positions. So the Euro-CAD is doing really nicely. Yesterday, Euro-MEX was like an absolute bloody surprise to me. The speed that it went up like a percent in an hour, or let's say 0.75% in an hour, was a bit funny. It nearly cost me my position, but I managed to keep onto it and to hold on to it, and now we're trading back lower. And I think that soft landing in the back as well is telling me that risk or carry may be doing all right. And that's also one of the reasons why I went back into Euro-MEX yesterday and the day before. And I'm a little bit short Euro-Canada as well. I think those are two pretty decent crosses to keep an eye on when risk is not doing too badly.
Yeah, exactly. And this one, I tried catching a little knife first thing this morning at this 144 area, because it had been a bit of support previously when we were ping-ponging off the top here. But I lost a couple of nails on that one. You've been short above 144, so that was a nice one for you, getting that break there. Yeah, not much else to get stuck into at the moment. Obviously, me and Kay are clearing off for the day, so we're not going to be getting heavy in any trades right now, managing what we've got, keeping an eye on the phones and whatnot. Kay, you got anything quickly you want to look at before we
reply to Horatio Barber? If I know you guys are going Sterling Aussie, yeah, Sterling Aussie, it's exactly those levels. Let me quickly hang on, because this is not the right screen to share. Not that I was on any you know.
Sure. Cooking site.
Yeah. And let me kill my what's the name of the site again? Pornhub or whatever.
Yeah.
Yeah. So yeah, there's your Sterling Aussie, right? You're looking at that. We're in the downward channel. Your 171 is exactly there. It's around 171.80 for me, and then your 169 is just there. If we are in a scenario, yeah, I mean, if you're short, happy days. I'd say be at that, well, 173.5. If that's too near, 174.5 should be a bit of a level you're looking at. I just wanted to quickly show those positions that I'm in, right? I've added this morning. I don't know whether it's valid or not, but we are on a little bit of support here in the Euro-CAD, and actually it is holding right now. But yeah, we've been short basically from those highs here and going in and out, and short again later on in the Euro-CAD. A few of us are trading this, and it's with decent success. So the techies amongst us may look at this line now to be broken. If you take the measured move from the double, triple top down, we arrive bang on the 142, the prior low in early January, around 142.35.40. So this may be the target for this move lower. Now, maybe, okay, we're really trading this from the short end, but as I was saying as well, and as I'm usually doing, I have taken some off here along just ahead of this line. and now the resistance should be at 144.40. That is one. And then really, yeah, quick look at the metals door, because silver is trying to hold this this trend line, okay, and this underside and the prior tops. So keep an eye on those low 22s. They are a zone of interest. And then for the rest, really, cable this morning tagged the support that I've shown yesterday and this morning in the room, 119.80.85. I think that's a pretty respectable level to keep an eye on later today on Powell perhaps. And on the top side, 120.70.85. I'm trying to rush my words. And the euro dollar, I've got a bit of a 106.80 in there, but I think if the dollar move has to run further, we need to pay attention to what's going to happen around 106. That is my level that I'm now watching to see if this move is really a dollar move is going to push through, and also versus the euro. But don't forget that ECB is still in a pretty hawkish mood. So if ever we get down here at 106, I'm going to reevaluate what's going to happen with the euro dollar, and then look at the euro crosses, look at all the dollar pairs. But to me, this is a pretty important level right now on the euro dollar, if ever it would get down there. And I'm going to keep it to that for today, because we are having to shoot.
Yeah, thank you very much, boys and girls. Browns in Shoreditch, Arif? No, well, no. No, we're going to the Jam, what it's called now, Jam Pot, the old Jamaican wine house in Cornhill. A bit of nostalgia there. So, yeah, well, you never know what happens after, but I'm aiming to get a decent train home. Anyway, we're going to call it a day. We've got problems on the trains typically, so we're all going to be rushing out the door. Sorry for the quick show today, folks. We'll be back as normal tomorrow. Promise you not too hungover. Trade safe, trade well. Hope you make lots of pips. Thank you very much, and have a great day. We'll see you tomorrow. See you soon, Kate.
Yeah, see you, bro.